The trade issues continue. We've been told there has been much progress while simultaneously being told that nothing has really been accomplished. During the back and forth disaster, global shipping has seen a major freefall. While this can certainly turn around with an agreement between the US and China, right now it looks as though there would be nothing but an extension to the current truce plus some vague acknowledgements of what both sides will need to agree upon. Only time will tell. You came here for the truth, so let me unveil that for you. Today we are going to talk about what is happening with global shipping. This is obviously a very important indicator to be able to determine what has happened with business, with imports, with exports, with the trade issues that are happening. So I wanted to begin by taking a look at the Baltic Dry Index. This is regarded as being potentially the number one indicator to look at what is happening with global trade, and you can see over the last year this has not looked very good. When you take it for the beginning of 2019, this has fallen dramatically. In fact, the fall has been approximately 50%. Then you take it from its peak back in 2018 and you see it's even worse. I mean, it was practically at 1800 and it sits at 600 today. So this has dropped in a free fall manner, and I do believe that people need to be concerned, because if this isn't resolved by fixing the trade issues with China and the US, and we have something even worse following it, this could mean we are in for a global slowdown. So I want to keep my eyes peeled on the Baltic Dry. I know you will. It's an indicator that I have shown many times before. Many people have been asking me to look at it over the years, and of course this happens to be one of the most important ones that you can look at. There are several others, of course, but this happens to be one that I believe is truly critical to understand. So we're going to look further into the details of this today, so let's move on. This is the Baltic Dry Index compared over the last few years, going back to 2010, and it's just basically showing us that this has come down quite significantly. You can see the dark red line. That is the 2019 price as of now. Of course, who knows where it will be by the end of the year, but just showing us that this has really looked terrible for the beginning of 2019, and we'll see what happens with the issues between the US and China. Free-falling freight rates spell trouble for shipping. A slowing global economy coupled with weak demand from China over the Lunar New Year and the iron ore disaster from Brazil are dragging shipping rates to near record lows, and few in the industry expect things to improve anytime soon. There are many issues that are happening right now, and I do believe it's not just in 2019. As I showed you in the chart, this has been going on since 2018, where we have seen the global economy slowing down. And this obviously was apparent from October and beyond. Things have changed in 2019, but not according to the Baltic Dry. Brokers in Singapore and London said Cape-sized vessels, the largest ships that move bulk commodities like iron ore, coal, and aluminum, were chartered in the spot market for as low as $8,200 a day, a $500 decline from the day before. Break-even costs for carriers can be as high as $15,000 a day, and the daily rates hovered above $20,000 last year. Everyone is looking for a catalyst to push the market up, but it's not there. And this tells us that there is reason to worry. And like I mentioned, I don't think it's just because of what's happening with China and the US. I think there's more going on, and that is a slowing economy. Certainly, though, I do believe that if there is some sort of resolution between China and the US, that it will improve these factors. The Baltic Dry Index, which tracks the cost of moving bulk commodities and is considered a leading indicator of global trade, is down more than 50% since the start of the year. You have to understand, when an indicator like this drops, you need to pay attention. And I know it's not just you and I that's focusing on this. Other individuals, whether they're in this industry or not, are keeping their eyes peeled. The long Lunar New Year holiday in early February is one of the slowest periods in commodities trading, as factories in China, the world's biggest importer of raw materials, shut down. But ship executives say that the bulk seaborne freight business is more broadly suffering from the lowest demand in 2 years among the trade issues that are taking place. A long slowdown in the Chinese economy will hurt commodity demand and send shipping rates sharply lower. That's what we're already seeing. But remember, this has been going on since the middle of 2018. So let's cover this issue. Soybean exports to China dropped 98% in 2018, while net farm income has fallen by about 20% across the United States. That's according to the Agriculture Department, and they clearly have outlined the problems that are resulting from these trade issues. Before the trade issues began, China was the #1 importer of American farm products. Imagine the difference that they are seeing right now. This is not going to be resolved overnight, and I do believe it will be a step-by-step process. However, if China does agree to buy additional soybeans, as they have mentioned, I think that this will start to ease the tensions and we will see some positivity from that, though at this point we have seen nothing of the sort. Further along in the article, they mention the fact that Canada, Argentina, and Brazil have been replacing what China needed, and also suggesting that there's no guarantee they're going to go back to the US as a result. Why not diversify? Why not grab from different countries? And that way, if there are issues in the future, you don't have to worry so much about it. Doesn't mean that your primary partner can't still be the US, but maybe you want to have additional partners as well. And maybe you're not going to get the best pricing, maybe it's not the most reliable as a result, but in issues like this, it seems to be quite priceless. Of course, if you have standstills, if you have problems and troubles, then that is really highlighted in times like this. So we'll see how it all unfolds. There's not much time remaining, and of course I will be covering it here on the channel, so stay tuned. US-China trade issues, winner takes all means both sides lose, Beijing's ambassador to Washington says. And isn't that interesting? When you have both sides that demand a certain level of insistence on winning, they need to suggest to everybody that it is a zero-sum game. We are going to win no matter what. Not both sides get to win, only one side. And obviously neither of them wants to look weak. Their markets are down. They want to show that strength. So this might be a very, very long process. And of course, that spills out into this issue. IMF's Lagarde says oil exporters not fully recovered from 2014 shock. I'm mentioning this just to talk about oil, essentially one of the most important commodities in the world, that you need to track what is happening with oil on a regular basis. Not just the price, but what is happening from the exporter's point of view. Are they establishing communications, deals, agreements with other countries to be able to get that moving, to get those purchases happening? So always keep your eye on that. I think it is one of those important indicators to look at, there's no doubt. And then last but not least, when we want to understand what's happening with the financial system, you need to know about the monetary supply, specifically the velocity of money. And this tells us right here that over time, the velocity of money is slowing down. Yes, there are ups and downs along the way, but clearly since the late 90s, we have seen this coming further and further down. And that's not a good sign, because currency, like current, needs to remain in motion. It cannot stand still. And essentially what this means is $1, you get paid with it, you give that dollar to the store and you buy a pack of gum, and that person has it in their cash register. They take that money, they go and spend it on their gasoline. That gasoline at the gas station, all the money from there then goes to buy something else, and then it buys something else and something else. And that's the currency that we have. But when that slows down, it tends to be a very big problem. But if you look at it, this is very strange. It's very unusual that despite the record boom that we've experienced in the markets, in equities specifically, and even in real estate, you are seeing the velocity of money declining as if it's a contraction. This is because of quantitative easing and the madness that has has been created as a result. All throughout this supposed recovery, we have seen the velocity of money declining. If you compare that to what we saw after the year 2001, the money supply started to expand, but then there was a contraction once we got to about 2006. And that was very clear. The subprime issue started to come up, and you had the housing crisis, and then the derivatives, and then the banking crisis, and so on. That contraction occurred. But the contraction never really stopped. It just continued further and further and further. And while, like I said, there are ups and downs, this doesn't really make sense to me. We shouldn't be seeing this, but of course we are. I think there's a global slowdown that's been happening for a while, and central banks are simply papering over it, buying time, but the inevitable crisis will unfold. If you found this video informative, please give me a thumbs up. Give me 2 thumbs up. Give me 2 thumbs up and 2 toes up. Give me what you can on here with a comment. Hit that subscribe button. Anything you can do to support this channel, I really do appreciate it. Of course, if you watch those advertisements there, that happens to help me out as well. So, if you want to do that, I always appreciate it. And last but not least, if you want the financial education you were not taught in school, well, these 2 books have everything that you need. Check them out at the link in the description. You'll be able to find out about the foundation, the history of the asset classes, making money, so much more. Check it out there. If you want the audiobook, you can get that at themoneygps.com.